each individual location, you would need to have quarterly financial statements that you could compare from 2020 to 2019 for each one of those individual locations.
Okay. How do you show the 25% reduction in gross receipts?
So, there's definitely, and Mike may be able to help with this from an accounting side, there's a couple of different ways. From the bank's perspective, obviously, we would really like to have quarterly financial statements. The SBA has also said you can use bank statements to show this reduction. However, obviously, if a business owner sends us in 3 months and a quarter to come up with their quarterly financial statement through bank statements, they're going to have to highlight and annotate all of the revenue that's coming in on that bank statement. We're not going to be able to look at it at the bank and just interpret it for them. They're going to have to do some extra work. So if you have quarterly financial statements or have accounting software where you can easily take those bank statements, feed them into your accounting software, and generate a profit and loss statement that's done on a quarterly basis, that's going to be the cleanest and easiest way. We understand for some businesses or 1099 employees that you may not need to go through that amount of detail. It may be pretty simple, especially in the instance of a 1099 employee, just to provide us simple bank statement documentation that shows, for January, February, and March, you had a lower amount of revenue coming in than you did in the previous year. So there's a couple of different ways, but Mike, I'll let you kind of elaborate.
Yeah, Mike, you want to weigh in on that one
on that as well?
Yeah, no, absolutely. And I think the issue that that we're seeing, and that's absolutely right, Lane, and we've seen some applications get kicked back because, like you said, people provide bank statements and it's like, here you go. Here's the second quarter, my 3 bank statement from second quarter 2020, and here's my, second quarter 2019. Good luck. And a couple of things. The issue that we've been seeing is clients have been asking the question, specifically whether it's cash or accrual basis. A lot of clients may maintain their books on an accrual basis and then convert to cash for tax purposes. I think that the definition was basically whatever you use operationally. So if you use both, I believe you should be able to kind of pick and choose, but be careful about what you provide, right? So if you're providing on an accrual basis, it's going to be financial statements, right? If you're on an accrual basis, do not provide bank statements because they're on a cash basis, right? And then on the tax return, they did provide guidance essentially saying that if you're having 25% loss for the entire year, then you will certainly have at least 1 quarter. You can provide tax returns, but not a lot of people have 2020 tax returns completed yet. So, I think you have some flexibility on what support you provide, whether it's on a cash and accrual basis. However, be consistent with making sure that the support lines up with the method that you are providing.
That makes sense. Nick, any comments relative to this?
Yeah, so what's interesting, just from a legal standpoint, is when it comes to the calculation of the 25% reduction, there's been a lot of question about how to interpret the rules, how it applies. And, one specific issue we keep getting, and I would certainly invite Lane and Mike to comment from your perspectives as well, but that is the requirement for purposes of calculating 25% reduction to include the gross receipts of an affiliate, right? And that's always a buzzword that sends a lot of us kind of cowering into the corner. Affiliation for round 1 was relatively straightforward because we were looking at affiliation for purposes of size determination and therefore eligibility. This time around, though, affiliation has taken on kind of a couple of different connotations that we have to look at. Certainly, still, we have to look at affiliation for purposes of size. However, then we have the issue of what does it mean to be an affiliate for purposes of gross receipts. And then there is this yet another kind of quasi-affiliation issue, and that is, what does it mean to be part of a single corporate group for purposes of the aggregate lending cap? So, we kind of go back to that analogy of keep your head on a swivel, make sure we're understanding that. But I'm going to put, unfair, but I'm going to try to put Mike on the spot here because I actually I'm curious from the accounting standpoint, and let's talk specifically about inclusion of gross receipts of an affiliate for purposes of the revenue reduction, you know, when I read the IFR and there's a specific footnote, and I don't want to show how much of a nerd I am by quoting the specific footnote, but there's a footnote in the IFR, and it actually talks about and references a CFR provision that talks about how the SBA calculates gross receipts. And then you read that CFR, and it states that any terms used in that CFR that are not defined have the same meanings as defined by the IRS. So then you go and you look at the IRS definition of an affiliate, and I believe that then directs you to another IRS definition of a controlled group. So here, the question we keep getting is there a different definition of an affiliate for purposes of gross receipts as compared to the typical affiliation factors for size determination?
Okay.
Yeah, Nick, and obviously a great question. I think that what you cited, you know, when they referenced the you know, because we started parsing that sentence apart too, and saying when you reference the IRS, are you referring to the first part of that previous sentence, which is essentially what method are you using? And so some people were interpreting that as just like, well, this says that you have to use tax method, which I don't think is right. The definitions of the different revenues. So, you know, I think it's a difficult call. I mean, we defer to the standard affiliation guidance because that's what's really out there, right? But it's unknown, you know. But I think that when you talk about affiliation, you know, some of the issues that we see are, let's say you are company A and you have two other affiliates, right? In combination, you have a 25% reduction, but company A itself does not, right? Mm-hmm. And so, you know, do you just defer to the affiliation, or is it both, or is it, you know, just the affiliation rule, which is not necessarily clear when you talk about, you know, people that specialize in calculating credits because they have affiliation rules for employee retention credit. They say it's just on affiliation. If you yourself don't have 25% decrease, but in affiliation you do, you're good. But I don't know that that's clear. You know, so we defer to the standard affiliation guidance, which is, hey, 51% or more, you know, then you're good. Otherwise, you know, you kind of get into the control aspect, and then, you know, that's where it gets a little bit more nuanced, right? But yeah, you can go deep into the rabbit hole when you know, when talking about affiliation.
Right. Yeah.
That's good. Let's talk for a second about forgiveness. Maybe Lane, you could share, you know, I got a loan the first round, I got a loan the second round. When can I apply for forgiveness? Can I do it in parallel and sequence? Lane, share with what your thoughts are on that, please.
Yeah, so, you know, one of the caveats for applying for PPP round 2 is that you've actually used all the money from your first round. So if you've used all the money from your first round, you are ready to go ahead and apply for forgiveness. Now, I've heard lots of different reasons from individuals as to why they're potentially waiting. You know, I think they're hoping at some point Congress is going to do some sort of blanket forgiveness for, you know, $350 and less. I mean, we've got the application now for the blanket forgiveness, for the simplified forgiveness for $150,000 and less, and then the $50,000 and under has been out there for quite a while. They're welcome to apply for forgiveness on their first one just as soon as they're done using it. And then as it goes for the second round, you know, as Mike mentioned earlier, with SBA allowing that window now of whenever you're done using the money, anywhere between the 8 and 24 weeks, then you can go and apply for forgiveness. Now, as with every caveat that I think we have out there, forgiveness seems to be ever changing from SBA. So I'm sure there'll be more, you know, details to come. If you're one of the companies that did take 2 million or more and you're going under your review with SBA, that is a slower process. And I do, you know, caution people to make sure you've got all your ducks in a row before you put all your information together to apply for forgiveness if you have an SBA PPP loan that's 2 million or more. And I'm sure that's where you probably want to call your attorney like Nick to make sure you've dotted all your I's and crossed all your T's, because when they get that questionnaire back from SBA, we've had a lot of clients, freak out again, going back to the necessity question. And so just, I don't think the necessity question is as big of a deal as people make it, as long as you have your documentation and you have a justification for why you took out the loan and exactly how you used it. If you can justify it and you have good documentation to back it up, I would not be scared to go ahead and apply for forgiveness. Nick, I don't know what you've seen on that end from, companies, the larger ones going through that process, but if you're one of the lower amounts, we've actually had really good success here at Pinnacle of getting those applications in and getting them forgiven in a fairly quickly fashion. And then with them backing out the EIDL and now reversing that, that's a nice change as well, that you don't have to worry about giving up any of your forgiveness for taking that EIDL advance. You should be able to get full forgiveness if you used all the money appropriately. And making sure you showed you used 65% of it on payroll is always key.
Awesome. Nick, Mike,
Yeah,
any comments?
Yeah, so I think that there certainly is this issue about the subjective qualifier as to need, right? And especially on loans over $2 million, we have a lot of borrowers now and lenders working with their borrowers who are filling out the 3509 and the 3510. And what we encouraged our lender clients to kind of coach their borrowers on the front end of round one and are doing so now on round two is encouraging them, regardless of the size of their loan. Because we've had lenders who early on in forgiveness had literally, I had one lender who had a borrower audit or review by SBA on a $3,000 loan. And so, certainly I think things have loosened up a little bit there and they're really focusing on the larger loans. But what we encourage the lenders to explain to the borrowers is that, look, when you're signing that application, you're making a certification that based on the circumstances at that time, you're making a subjective determination as to uncertainty of your business and whether that's as an independent contractor or sole proprietor or otherwise, because of the ongoing COVID concerns. And so the age-old advice that I give as an attorney is document, right? Document your file. If you're the borrower, what better time to jot down, even if it's a paragraph description of what's going on in your business today that leads you to make that good faith certification as to need and uncertainty. And certainly as it relates to loans over $2 million, that's where we're encouraging lenders to for lack of a better term, coach or encourage their borrowers, while you're filling out the application, draft or type out your justification statement, so to speak, so that later on when you do need to fill out that 3509, you can refresh your recollection, because it's not like we all don't have 10 million things going through our heads on a daily basis. And with this stretching out, and as we know, based on the deferment period and the covered period, it could be from the time that the borrower gets their loan to the time that they could be a year and a half, right, before they even get a review. So I think definitely putting notes like that in the borrower file and certainly the lender's file is helpful.
Well, certainly SBA lending has always been lender certified, lender oriented certified. This process has been more borrower certified. Is there anything else, in your opinion, as a lender that we should be doing or we haven't done that's going to risk us losing the fees or the support of the SBA going forward?
So I'm not so sure that there's concerns about fees. Outside of any unfortunate direct and intentional fraudulent activity by borrowers or lenders. So I'm not necessarily concerned about that. The big question and the unknown that we have right now is how will the guarantee stand up? If there are issues related to ineligibility, whether intentional, unintentional, fraudulent, or otherwise by the borrower. And here's what gives me heartburn, because this is just not the way that we and I say we because I like to consider myself part of the lending community. Lane, hope you don't mind. But you know, I mean, the issue, and Chuck, to your point, is that SBA lending has always been, for the most part, lender certification centric, right? And PPP is really borrower certification centric. And I get questions all the time by lenders saying, hey, this does not feel right. What the borrower is telling me, it does not feel right. They sign the certification. How much do I need to dig? And that's a really tough question, because for those of us that, like all of us on this panel that have been in the industry for so many years, we know traditionally it's the lender's responsibility to do the due diligence to
everything,
potential fraud or otherwise. But my concern, based on how the hold harmless provision is written in the CARES Act and the Economic Aid Act, the FAQs and the IFRs that state that the lender can rely on the borrower certifications, it's a fine line, in my opinion, you know, as it relates to kind of doing that deeper dive of when are you tripping over the line of reliance on the certifications, to the extent that, and the term that we always use in the legal world is, you can't unknow something you know.
Yeah.
Right. So if there is something that you discover and for whatever reason, it doesn't rise to the level of the financial institution pumping the brakes on the deal, and later on it becomes an issue, I personally, as an attorney, I think SBA would have a position to say, well, lender, it wasn't necessarily your responsibility to go down that rabbit hole, but once you did and learned what you learned, then you had a duty to mitigate the risk to the
does it pass the smell test? Right?
Exactly. So, and that's a very unique fine line, because again, I think we're all used to just saying lender responsibility to make sure everything is up to par.
Lane, how have you been living